Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for September 30th, 2024, that last trading day of September. What will it be? Well, I hope everyone had a great weekend, ready for another wild week in the market. Let's take a look at what happened overnight. First off, if we take a look at Asian markets were kind of mixed in some big volatility. China surged 8%, up a full 8.06% last night, while the Nikkei fell 4.80%. So quite a change going on over there. So a mix of data, but mostly higher, with Hong Kong up 2.43%. If we take a look at European markets this morning, however, we are right across the board there, with the DAX down 0.51%, the FTSE down 0.45%, and the CAC being down 1.58%. And U.S. futures are also showing just a tiny bit of bearishness, with the Dow down 0.09%, the S&P 500 0.11%, and the NASDAQ down 0.14% this morning. So possibly a little follow through to a bit of that selling that came in on Friday. If we take a look at oil markets here this morning, if we take a look at XLE in the pre-market here showing a little bit of a pop and drop type pattern in here. Right now we have oil showing just a little bit lower in the futures this morning, down 13 cents at 68.05 a barrel. Brent being down 61 cents at 71.54 a barrel. Obviously, there are some concerns after some recent step up in the war over there between Israel and the Middle East, and so we'll want to be keeping a pretty close eye on that as this continues to run the risk of slipping out of control. If we take a look at natural gas this morning, however, natural gas is up just ever so slightly, and you can see that UNG made that nice move on Friday, breaking through that resistance, and it is trying to follow through with that this morning. If we take a look at bond prices this morning, well, interestingly enough, we have bonds just a little bit higher here today. The 2-year bond at 3.60%, the 10-year bond is at 3.77%. Our 30-year bond is at 4.11%. So we'll want to be keeping an eye on that as those bonds start creeping back up, maybe with a little bit of worry. If we take a look at precious metals here this morning, we're getting a follow through to Friday's selling in gold. Gold is really stretched up here and needs a rest or pullback. Pulling back just a little this morning. Silver, copper, platinum, and palladium also moving lower here this morning. If we take a look at the U.S. dollar is trying to move up on those higher bond yields, so keep an eye on that. If we take a look at the cryptos out here this morning, well, Bitcoin is having a little bit of a pullback here. $2,296 a coin, as if you consider that to be a little pullback. After 2 nice days stretching to the upside, we're seeing kind of a nasty beginning to the week on those cryptocurrencies, with red across the board in those crypto markets. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. How about we take a look at these charts and see if we can figure out how we might want to approach the market for today, and remembering that we want to shake off that bias and just look at the charts for what they are, not for what we want them to be. So first off, here in our diamonds, if I were to take a little bit of a square and drop that around that area right in here, if you remember last Monday, I suggested the high probability that we could be in consolidation for a while. And that's pretty typical for this time of year while we're waiting for the next round of earnings. And of course, there's just that really palpable uncertainty out there with the wars going on in the world today. We're not resolving too much of that. And of course, this election coming up. Now, we tried to really get something going here on Friday, ended up leaving behind a shooting star pattern. So if those bears were to find, well, let's go with the bulls first. If the bulls were to find inspiration here today, well, one of the first things we need to do is break back above that little resistance area in the chart. If we can break back through there, then we'll start looking up here to see if we can come up into there and maybe even break to new record highs in the diamonds. And I think there's every reason to believe that would be possible, despite the fact that we've been so extended here in the market. Now, if those bears were to find inspiration here today, well, I would suggest the bottom side of that little consolidation zone would be a likely test if we were to push down into here. That's just testing this upside trend that you see here, and no particular worries if that were to occur. Breaking down below that, you'll notice we've also got this trend right in here. Breaking down below that, there is a test of support down here, and I still don't think that would cause any issues or worries in the market if we tested there. However, if those bears were to push on through beyond that point, that's where I do think there might be a little bit of concern, a little bit of worry starting to show up. And certainly there are some reasons why that could occur. We'll talk about that in a minute. If we take a look at our S&P 500, the S&P 500 also in that nice little tight resting consolidation in here, and we have very much the same situation here in the S&P 500. As you can see, if I were to draw that box around this area here in the market, well, you can see that consolidation is still there, and if we look at the upside trend, it's even telling us we could rest even longer. So if those bulls were to find inspiration, well, first thing, breakthrough up here, and then we'd look at all-time highs in the market. If we're unable to do that, a test down here, if the bears get going, wouldn't be a major surprise. And if they were to break down a little bit further, right down into here, we would test that upside trend and test that support in the chart. And I don't think we would see any major concern in the market if that were to occur. Of course, beyond that point, that would probably raise some fear in the market, suggesting that there's a problem here. So watch that closely, and you can see there's every reason to believe that if this is our trend here in the chart and this is our price support in the chart, that we could continue to just consolidate in this range as we wait for earnings, because we remember we're not going to get into major earnings. Let's go to JP Morgan. JP Morgan's not until the 11th of this next month. So on that 11th, we're going to get Friday, which is essentially 2 weeks away before we even begin those earnings reports. And so that uncertainty that we have heading into this earnings season, well, could easily see more consolidation in the market. If we take a look at our QQQ showing quite a little bit of pullback here the last couple of days after zooming up here, tagging this resistance in the chart. And I think all we've done is widen out this box of potential volatility in this consolidation in here. So if the bulls were to find inspiration today, we would first push see if we can break through up in here, get through Friday's high, see if we can break through up into here and to retest this resistance in the chart. Now, if it can break through there, then that would be really interesting. And then we'd start stretching up in here and maybe even pushing up toward all-time highs in the QQQ. And I know the market would really love to see that. Now, if the bears were to find inspiration, well, I'm looking down in here. We've got a little bit of price support right there. And if we were to push and break down through there, I'm suggesting we would come down into this bigger area of price support in the chart. There's quite a bit of price action support right in there. And I think we'd probably still be fine if we broke that area, if we came down just to the underneath side of those areas and maybe even tested this trend. Probably wouldn't hurt us at all in the market. Beyond that point, we might start running into a little fear on those bears. Let's take a look at our IWM. Our IWM also been kind of languishing here. We made an attempt on Friday to get something going, and it just wasn't able to hold, pulling back. So if we were to see bulls continue to push through, well, I think the first area up in here, so we need to break back through some of this resistance in here, break up back up in there, and then we'd start looking at these retests a little bit higher and maybe coming all the way back up into here to see if we can stretch on up to these 2021, 2022 highs. Unfortunately, we don't have a lot of market breadth with corporate buybacks ending, the blackout period in full swing, and our breadth is a little bit weak in the market. But if those bears were to find inspiration, you could see the possibility without too much work, maybe even pushing down here to retest this support here in the chart. Now, breaking below that, we'll start moving on down, and there's some levels down in here that we could easily test. You'll want to make note this upside trend, and you could draw this in several different ways. These were volatility moves here, and I just kind of left them as outliers in that upside trend. But a pullback into here would probably start to raise some concern if we really started breaking down below this area. It'd raise a little bit of fear in the market. So keep an eye on that. If we look at our VIX, well, our VIX also had a little bit of a bump up on Friday with that selling that came in to finish up the week. After pushing really hard, we found this support in here and started to push back up. The good news is we haven't broken out of this downtrend yet. We'll want to be watching that carefully. Breaking out of this downtrend and holding the higher low is where we would be concerned. A push through doesn't necessarily hurt us because we can certainly whipsaw that and come right back down. But a hold of a higher low, that's what we'll have to be watching for carefully. So if those bears were to find inspiration and break that downtrend, that's what we'll start looking for. If the bulls, however, find inspiration today, then I would suggest a pullback coming right back in here to test this support would be the place, and then breaking down below, well, you can see where we would go after that. So watch that closely on the VIX. Our T2122 T2122 has been up here in the bearish reversal zone for some time. We push and we push and we push, and all of the hype on the rate cut, but we've done a lot of things to ignore problems that are occurring in our economy, and not just here, but in economies around the world. So we'll want to be watching this carefully. We are kind of elevated, and remember, T2122 always, once it's been up here, it always finds a way to make it back down. So I would be expecting and watching for that possibility with this little hookup here that we saw on Friday come in, where we popped up and ran way up here into and was way overbought on the diamonds, to then see it starting to sell and pull back. So we still have upside opportunity if those bulls can find the inspiration. But if those bears were to become inspired, we've opened up a big downside opportunity as well to be paying attention to if they can get some, well, if the bears start showing their teeth a little bit. So watch that closely. Our T2108 did pretty good on Friday. The percentage of stocks above the 40-day moving average holding up there really good, pushing back up here toward this resistance level in the chart. Remember, anything, if we can break through this 70 up here area, right up here in the mid 70s is where we run into an extreme overbought condition in T2108. And if the bears were to find inspiration, we've got some good support underneath here. So I don't know that there'd be anything to particularly worry about unless those bears became really, really aggressive. And the same with T2107. T2107 had a good day on Friday, held up okay, pushing to the upside. You can see mid 60s up here is where we want to watch in the percentage of stocks above the 200. Once we start getting up there, we start reaching kind of an overbought, extreme overbought condition for T2107, and we'd start looking or watching for that possibility of a pullback. So watch that carefully. If it does pull back, though, we've got really good supports in here for now, so watch that. And then if we take a look at our T2101, this is really our problem. In T2101, we have a very little market breadth. We have corporate buyback halting. They can't do that right now. So we're seeing this breadth continuing to decline, and I suspect there's a good chance that that could continue for the next at least week, maybe longer, as we wait for that next round of earnings. Now, of course, we have some things on the economic calendar that can inspire short-term bursts of energy in here, but watch that closely. We're just not getting that breadth to follow along with this extension that we have in the market. So just be careful there. If we take a look at that economic calendar here for today, well, what I was talking about is we've got quite a little bit going on the jobs front this week that will be important. Now, as you can see today, not a whole lot going on in here except some Fed speak. We do have Bauman speaking. We've got a Chicago PMI number coming out and a Dallas Fed manufacturing. Now, Chicago PMI, they're looking for a 46.0. Remember that that would be a little bit of decline, tiny decline from 46.1. Remembering that anything in the PMI below 50 means that that industry that is still in contraction. And if we take a look at our Dallas Fed manufacturing, they're looking at that coming in at a negative 10, which is again, we don't seem to care at all about our manufacturing being in such a terrible circumstance here in the United States, but there it is. We've pretty much ignored that. If we take a look, we've got some bond auctions in here, and then we're going to have Jerome Powell speaking at 1 p.m. So anytime he speaks, we got to pay attention to that. Looking into the rest of the week, we're going to be coming over here. We've got ISM, PMI manufacturing, ISM, construction spending, and then that job openings report and more Fed speak in here. As you can see on Wednesday, we've got some Fed speak going on here, but we've got mortgage apps and an ADP report again on that jobs front, and lots of just Fed conversation. If we look at Thursday, we're going to hit those jobless claims as normal. Challenger job cut report will be in there. Factory orders, ISM, and natural gas report. But as you can see, a lot of Fed speak here throughout the week. On Friday, however, this is going to be the big one for the week. We've got that employment situation number that will be probably very important for the market, as we're very much hoping for more rate cuts and things like that. We'll have to see how these numbers come in. So watch that closely, and of course some more Fed speak. So relatively light week with just that uncertainty of that employment situation number coming in on Friday, and then the hurry up and wait for the next round of earnings to come out here, and that could just keep us a little bit stale with that breadth falling in the market. Let's take a look at our earnings calendar here for today. And our earnings calendar, there really isn't much going on today. We've got Carnival Cruise will be reporting their earnings this morning, and that's really the only notable for the entire day. And normal as we slip here into the next quarter of earnings, that Not much going on there. So we're not going to find a whole lot of inspiration on the earnings front as well. So how about we take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and click that thumbs up button, leave a brief comment, that helps the channel to continue to grow. I do truly appreciate that. And thank you to everyone who shares these videos on your social media feed and continues to support the channel through the Buy Me a Coffee link. You guys are truly, truly awesome. Let's take a look at some of these stocks setting up. And remember, these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market, considering kind of the extension that we are in this market and the way the futures are acting this morning. As I've continued to warn, start raising those stop losses, start thinking about that protection of profits just in case the market does decide to roll over. Now, taking a look at a few of these charts in here, there are quite a few that have really, really good patterns here in the market. Take a look at Roku. I put an alert here on Roku, this nice little resting consolidation in here. Like the way that's setting up, and be looking for that next bullish opportunity for that to push on through to the upside. AKAM is another one, and you can see we're pushing here in the pre-market here on AKAM. I've placed this entire area here in alert. You can see that's a pretty good resistance area in the chart. Pop through there could certainly be interesting, and we are in a very bullish pattern set up here on AKAM, so would be worth keeping a close eye on that. Take a look at this SYM. SYM, place a price alert on here. We have a beautiful little inverted head and shoulders pattern setting up in here. Like the way that is setting up. Now it may still have to consolidate or rest a little bit, but I would look for that opportunity. If that can pop on through, if that rests in here, pops on through up there, look for that gap fill in SYM, looking pretty decent overall. Take a look at Carvana, Cava. Cava hanging in here really nice, and you can see nice little resting consolidation in here. It may be starting to fade. I placed that price alert up there expecting this to kind of hold on to this area, and it's starting to fade just a little bit. But if those bulls were to find that inspiration and pop that on through, I would believe that that trend is just going to continue. So keep an eye on that. This NTNX has been dancing around here on this support. It pops up and then pulls back, pops up and pulls back. Unfortunately, it has at this point faded beyond this trend that you can see right here in the chart. But as long as it can consolidate and hold in this area, I would still be watching for that opportunity if we can get those bulls to come around to get that little push to the upside. I keep an eye on that. Notice there's a gap up here that could be filled. Could be a nice potential run to the upside. You know, I've been keeping an eye on PayPal, and unfortunately in PayPal I didn't catch this trade in here. I didn't buy it just because of the uncertainty of the market. I didn't buy it. Nice run to the upside here, but I'm going to switch this to a weekly chart. Take a look at that weekly chart coming up out of this bottom here. Now I would suggest any consolidating rest back in here toward trend, I would look at that next opportunity for a potential longer term hold in here, and just looking for PayPal to make that recovery back to the upside. And one of the reasons I'm bringing this up is tonight at 8 p.m. Eastern, I am going to be doing a public e-learning session on a requested subject. The requested subject was for longer term, or what I call position trades, and how to enter them, and looking for ways to protect those trades with hedging and how you would manage that longer term position. So if you guys are interested in that, please come to the public e-learning session tonight. Again, 8 p.m. Eastern. Just go to the Hit and Run Candlestick website. The link to get into the free trading room is right there at the top of the page. Come on in, you're all welcome. Invite your friends. That'll be this evening. Let's go back to a daily chart here, and let's take a look at Disney. Now, Disney made this nice little move up out of this bottoming pattern here, and got a little bit of energy coming in finally on this. This has been one of those stocks that's been ugly, ugly, ugly. But you can see breaking through some resistance here, trying to find that upside trend. I wouldn't want to chase this here because we're coming into this next area of price resistance. But any consolidation, rest, or pullback would set up the opportunity there in Disney. Something to keep an eye on anyway. Could be interesting. Take a look at Juniper. Juniper has rested in this area, and finally on Friday made a little bit of a pop here in that move, that nice tight consolidation. You can see it's trying to follow through here this morning. So watch carefully on Juniper, that possibility that could push on through here to the upside as well. Obviously, I still think that we need to be keeping a pretty close eye on these fluctuations in the dollar. The dollar is really showing uncertainty in this market condition, showing obviously in a downtrend, a failing pattern. And as we continue to cut rates, I would continue to expect the dollar to move lower. Right now, moving up here today. But if this dollar starts to roll over, you guys know that I have been watching these commodity prices pretty closely. Gold, silver, making some great money in those areas of the market. And if that dollar continues to fall, then watch for that possibility that those could start moving higher again. And you can see this gold pullback is nothing more than a resting pullback at the moment. Let it rest, let it pull back, and then look for that next opportunity. Take a look at some of the grain commodities. Soybeans in here had a really nice day on Friday. You can see we've got this nice little sandwich here of bullishness. We had a bull day, a bear day, and a bull day. That typically follows through to the upside. I actually call that a Fig Newton pattern. And if you see this nice little resting consolidation coming back out here toward this trend, I would look for that next opportunity there in soybeans. We have seen sugar just run hard to the upside. Whoops. Better get sugar. Just run hard to the upside. It needs a rest. I wouldn't chase that. But if you take a look at corn still setting up that nice bullish move. And if you look at DBA, which is the commodity, well, for Pete's sake, there we go, the commodity tracking ETF. Watch that carefully. It pushed up here into this resistance. Coca is another commodity that is super hot right now, moving up. But any resting consolidation in here back out to this trend could potentially set up that next opportunity in some of those commodities. So watch that closely, and I'm going to put oil and gas into those into that same place. If the dollar weakens, watch for those prices to go up. So with that, everyone, hey, I want to wish you all a fantastic day. Thank you so much for being here. Hope I see you tonight for the public e-learning session. Once again, 8 p.m. And I wish you all the best today, and I will see you right back here bright and early Tuesday morning. Great day, everyone.